Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update, where we try and help you guys navigate the treacherous cryptocurrency market. We try and work out where it is and where it's going, and really try and bring in other markets, macro sort of economic outlooks to really sort of position this market and try and figure out the path that it's on. And we've been calling for lower prices. We're getting there. I still don't think we've really seen capitulation yet. And we're going to be talking about a number of things. I continuously go into the environment that we're in because I think it's such an important one. We're going to get into household incomes. This is a tweet from me. Also talk about Bitcoin miners because I think Bitcoin miners are coming under some serious pressure, not just from an energy bill standpoint, but I also believe that politically they're not going to be very popular, certainly with an energy crisis taking place. And we're also going to talk about how things are not looking good. And the last time we had this kind of collateral squeeze in Europe was really through the ECB and the debt crisis, essentially, that took place. Going to talk about a number of other things, like the fact that we've got Ethereum's merge coming up this month. I think Ethereum is going to go straight back under $1,000 once we've had the merge. That's not financial advice, my own opinion. I think if you look at why people have bought in the first place, it's to benefit from the merge and the run up to it. You're going to have people taking the opposite side of that trade once it has essentially come to fruition. Once we've had the merge, you're also going to have a bit of confusion with tokens and a number of other things. And in this environment, who is going to be buying Ethereum for the long term with the prospects of it continuing to go down in this kind of a situation where, you know, everybody needs cash? I'm going to keep saying this on every single video. In an environment where people need cash, don't be in the asset that people are willing to sell to get that cash. We also see a record inflow in Bitcoin shorts through an investment vehicle. Now, I actually can see a short squeeze taking place here, so I still think we're going lower. I think you're going to see a 15k Bitcoin. We've said that, and we've been saying that really since 44k. But I can see in the short term, we're going to do a bit of TA on Bitcoin. Of course, we had a spill yesterday. I actually got out of a short literally 5 minutes before it spilled hard, just because I couldn't be asked to hold it anymore. That's trading for you, very frustrating at times. But there's going to be plenty more opportunities, in my opinion. So we will do a little bit of TA on Bitcoin. But let's just jump into it, guys. Let's take a look at the overall market. We're currently at $940 trillion. Bitcoin is sat at $18,788. Is down 60% year to date, is down on the 7-day time frame, 7.6%, and in the 24-hour time frame is down nearly 6%, 5.66%. Pretty brutal spill that we had. You're at a key level here. This is support for all intensive purposes until it breaks. Okay, significant level that you've fallen on. You could get a push back to the upside before we get that downside, but we will talk about that. Let's go into our kind of macro view for people that are new to this channel. This is household incomes, and they're crashing worldwide. So this is global real depositable income, and you can see just how significantly down this chart is. Now, one argument that I've made against the bottom callers and people think that we're going to go into in short succession a new bull market is that the environment doesn't support that. It's very important for me to keep reiterating this just because of how crucial it is to understanding this market. You know, markets are moved on buyers and sellers. What we had from March 2020 onwards was a printathon, which printed loads of money. We can see this. This is the M1 supply. We'll change that to red. You can see this. Huge influx of money, markets follow, starts to teeter off, markets put in marginally higher highs, which is never a particularly good sign. And then you see a decline, and of course, markets have gone with it. You've also got money being sort of vacuumed up instead of printed from central banks via interest rate hikes. There's a huge correlation between interest rate hikes. This is the Fed fund rate. No, we won't bring that up. What we'll do is do something else just to get this point across, because it's so important for me to stress liquidity, income, buying power, and that going into markets. And in the environment going into winter that we're going to be in, people aren't going to have that money to put into markets on a retail level, on an SME level, across the board. What do I want? This is the 30-day Fed Fund futures rate, and we'll overlay Bitcoin. just so we're showing you the correlation here between money supply, basically. You can see this. Euro dollar shows you a bit of a better picture. Still correlation today with this going down. And then, of course, you know, markets following. You can see the correlation. So it's all about liquidity. It's all about money flowing into markets. Let's go back to Bitcoin so we can do some TA a little bit later on. And this, of course, is household global income. So from a retail level, people aren't going to be buying crypto. March 2020 onwards, they were giving their furlough checks. Everyone had a little bit of extra cash they could spend because they weren't working. They weren't paying these bills or these kind of expenditures. This is a completely different environment where people actually don't have that money. They don't have the support. Maybe, and we're going to be watching the M1 supply, we get the support going into winter because they may have to print to get us out of this energy crisis. The energy crisis, more than likely, is going to be when we look at the yield curve, what this yield curve has been blamed on, you know, the kind of inflationary era. So it's important to remember this. Keep that as your macro view and your thesis for markets until we see reason to suggest otherwise. And that's going to help you as an investor moving forwards. Let's talk a little bit about miner capitulation and is it coming? You can see here you've got the Bitcoin mining revenue total, all miners in US dollars, and you can see it's just a continuous down climb whilst the price has gone up. Miners are close to that break-even point in terms of mining Bitcoin. Certainly as a whole, that's the case. Obviously, some miners are a lot more profitable than others. But the thing is, what happens if energy prices continue to increase? Okay, that is not a good picture whatsoever. And then their costs obviously go up. And then what happens if the actual, you know, in Germany, they're talking about maybe rationing and they're talking about all these things in terms of energy. What happens if energy becomes that scarce that they have to do things like rationing? They're not going to favor Bitcoin miners over people and businesses keeping their lights on. So this is going to be something we need to kind of pay attention to. And is this the cause for further downside? Potentially. This is from Macro Alpha, one of the most important and yet overlooked macro charts in the world right now. 2-year government or German government bond yield trading 100 bips, so basis points, so a whole percent, through the ECB's deposit rate last seen during the GFC and European debt crisis. A proper collateral squeeze. Liquidity, collateral. You're seeing liquidity squeezes across the board, ladies and gentlemen, a grab for cash. Why do you think the dollar's been getting such a bid? That was probably a bit of a forewarner. And it was weird because this week the dollar's been ripping. Bitcoin hasn't really been tanking. And I've been saying it should be. Well, the dollar's continued to rip and eventually you've had this tanking for Bitcoin, which I beautifully exited the short just before the market crash. But that's how the game of trading goes. I'd rather have actually lost money than for that to happen. But anyway, the final countdown to the Ethereum merge has begun. Ethereum is going to get tanked after the merge, guys, in my opinion. Remember that I said that. I'm going to do a full video on this. We're going to address things like the fact that people are going, oh, well, what about the triple halvening? Okay, when you're talking about the triple halvening, you're talking about supply, right? You're talking about the issuance rate. So there's going to be less supply hitting the market from running the network. But what about the supply that comes gushing in from people selling? It kind of counteracts and makes that triple halvening invalid until there's a point where the demand is far outweighing the supply, which is not the environment that we're in. So I'm not really bullish on Ethereum after the merge until the entire market bottoms. Everything's going to be centered on this market as directionally changing for us to get bullish on altcoins again. Investment products, shorting Bitcoin, see record inflows. I think this is Coin. Who is the owner of the products? CoinShares, yes. So CoinShares have seen basically a record inflow of people buying their short crypto product or short Bitcoin product. This is the recipe for disaster in terms of people getting wrecked. Whenever you see these record inflows, typically people are going to lose money. So I think you're going to get a short squeeze. Don't get me wrong, I think eventually you come down just because we're going up in the sort of mid-term, short term. Doesn't mean that that's my now bullish stance. I still think we come down, but I think you could take a little bit of time to get there. You might chop here. I'm not convinced that this is... I think there's going to be a moment, there's going to be an event that's going to cause the next proper down leg. I think this is just grinding. I think it's very likely for me. We looked at a Head and Shoulders. I think we might have even deleted the Head and Shoulders. Yeah, we have. We looked at Head and Shoulders here. And we were basically calling for this. Thicken this up. as your head and shoulders. And that what you were doing here was actually putting in the left shoulder. The right shoulder. So this was your head, this is your shoulder. And we had targets around about 14k going down. And this was your right shoulder. Well, actually, I think you could be setting up for a pretty... Forget the vertical head and shoulders, I still think is in play. You're going to be setting up for more of a head and shoulders here. You get some sort of rally. Maybe you push back up to here. And then come down. That's potentially the play. I don't like all these shorts aping in. Whenever I see on Twitter, I'm sure. The market looks weak. The market looks horrible. The market looks crap. That makes me nervous as hell in regards to going short. That's why I got out the short yesterday, because I was like, even though it was the wrong decision to make, I was like, a lot of people short here. But I think more people are going to short here. And what they don't realize is they're shorting on some significant support here. Okay, yeah, you do something like this, you grind, you break, and you do something like that. Okay, yeah, you've invalidated that support. But respect this until you see reason to do otherwise. I think it's to jump in short here is insane to me from a trading perspective. Maybe a long-term short, you don't mind a bit of chop to the upside. But let's see what we can get here. Do we get some sort of a rally up? You've had 3 consecutive or concessions of movement, potentially. And then we can look for the short somewhere up here. So I think this could be the play for Bitcoin. Maybe you have some sort of rally and then, you see that further stab down. And I think, this kind of really made me think, everyone's short right now. Markets like to take money off people. That's potentially at play. We do have the head and shoulders target actually to bring it up. Let's bring it up. 14k. And you can see that would kind of put you in this little pocket here, which I think may happen. So that's really all the TI I've got on Bitcoin. We've done so much TI over the past couple of days. It's all come to fruition. We'll see. It's really just figuring out how this now sets up. Do you get a head and shoulders pattern forming here? That would be detrimental. A very well-recognized pattern by many big traders out there. Does everything sort of validate it in terms of your indicators? And then do we see that slam down that may be event-driven? And the technicals may just be this sort of pre-warner. All I've got for you in this video, guys. If you enjoyed the content, like us, always appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday, guys. See you in the next one.